Hello and welcome to Bloomberg Quint's Facebook Live. We're here to discuss some of the key takeaways from GST Council's meeting. The first day of the 3-day meeting ended today, and the Council has made 3 key announcements. The formula for compensating states, the discussion that sort of revolved around was from 10 to 18%. The GST Council reached a consensus on 14%. The Council has decided that the base year for compensating the states would be 2015 and 16, and input tax credit will be part of the definition of revenue. Now, to sort of decode all of this, I have with me Badri Narayan of Lakshmi Kumaran and Sridharan. Badri, let's take one announcement at a time. Yep. I'd like to start with the 14% growth rate over 5 years that the Council has decided. Does this do justice to the states that maybe had a higher growth, and while others who will rejoice who had sort of a lower growth than 14%?
Very good question, and frankly speaking, we'll have to see how it pans out over the next few years. But the expectation is that if the rates are kept at a reasonable level, that GST will be an accelerator, and hopefully this compensation need not be paid over a period of time once the states are able to get more revenues over a period of time. But yes, it's a kind of a consensus rate. There are obviously some states like the UP and others which should claim a higher rate of growth of their revenues. There will be other states which are at a lower rate, and Finance Minister himself said that he looked at different combinations. These numbers are going between 10% to 18%. So I think 14% would be a fair number, and I guess if it's a consensus, then I guess there is some given and taken on this, and I think that should be something which I think the most states would be able to live with.
Okay, Badri, I think in this statement the Finance Minister mentioned the 14% growth rate over 5 years.
Yeah.
Does that mean it's sort of every year the 14% growth rate, or over 5 years? How will that work?
So yeah, India is growing at GDP is at 7%, 8%. Right. So you're expecting the tax revenues to keep growing on a year-on-year basis by about at least double, maybe anywhere between 12 to 18% is what the likely increase in revenues are. So we are looking at increasing on 14% on a year-on-year basis over a period of next 5 years. So that's really a number which is going to grow on the states every year.
Okay, so it will be, the compensation would be taking into account the growth rate of 14%
so
every year.
Yes, it will be 100 this year, it will become 114 next year, right, and so on and so forth.
And so on and so forth. Okay. Now, let me come to the base year for compensation, and that has been decided by the Council as 2015-16. Does that seem fair to you?
So there have been different theories, and I'm not an economist, I'm just a lawyer. So there are many theories on how to calculate compensation for the different years. What they try to do is that they've tried to take a year which is closest to the implementation of GST, so that the constitution which provides for compensation due to loss of implementation of GST is most closely associated with this base year. So if you took a base year of 12, 13 or 13, 14 or did an average, that may not be a fair value of the loss because of GST. It could be lost because of various other socio-economic factors. By having 15-16, probably it's something which is closest to what we can see from a GST perspective, and it's also a base year where probably the different states feel that they have done well or they have done okay. So it's something which is less prone to states not agreeing to it because it's closer to the GST year. So I think overall, I think 15-16 is a good year to pick for the purpose of basing your growth rates on.
Okay, all right. The third important announcement was that the input tax credit will be part of the definition of revenue. What are the implications of this?
Very good. So input tax credit, just to give a bit of a background of what this is basically a credit which is allowed for the purpose of paying your output tax. So input tax credit is, say for example, if I buy a pencil for 10 rupees on which I pay 2 rupee tax, when I resell this pencil for 15 rupees and I have to pay a 3 rupee tax on it, I can offset the 3 rupees with 2 rupees. In some cases, if the pencil is exempt, whatever taxes I have paid on the inputs remains an input tax credit which becomes part of the kitty of the states or the center, but doesn't get accounted as VAT revenues or GST revenue because it's not collected finally from the consumer. But these are very much part of the revenue of the states. By including input tax credit he's actually broadening the tax base for compensation, which will be a welcome move for the state. So the tax is not going to be based merely on what has been collected from the consumer, but also what has been received and retained by the states, because there's been a break in the credit chain. So it really truly shows what is the true collection of the taxes by the state.
It is a fairer picture of the compensation.
It's a fuller picture.
Okay.
It's a fuller picture,
Okay.
of what the compensation, what's the revenue that a state would be earning.
Okay. So states, I'm guessing, should be happy with
States
this
should
inclusion.
be happy, because if you calculate it just based on the fact that it is just the revenue from collection from consumers, it could be lower. For example, there are many goods in Gujarat, for example, where the final product is exempt, but taxes are collected at the earlier stages.
Okay.
And those taxes collected at the earlier stages, which actually go to the state revenue, will get included now, but may not have been included if you restricted yourself with only collections from the consumer.
Okay.
So it's a broadening of the tax base.
For states, then.
Yes.
That will be it. Okay, Badri, there were some of the statements the finance minister made, and I'm going to ask you to decode that for us. One is that the 11 geographically disadvantaged states are included now in the definition of revenue, and the government will include the revenue foregone as exemptions provided to 11 states in calculation of base revenue for FY16. What do you make of these statements, and what does it mean?
Okay, so in a GST scenario, area-based exemption, which is an exemption for excise or sales tax, where you don't pay any output tax, but you get to sell these goods without paying any output tax. That will not be feasible, because it will break the credit chain. Therefore, all area-based exemptions ultimately will get converted into refund mechanisms, or will get over a period of time taken out. If you calculate the revenue of these states, which are the hilly states, the 11 states tend to be the hilly states, the 8 northeast states, and then you have Jammu and Kashmir, Himachal Pradesh and Uttarakhand, that forms this thing. They give a lot of tax incentives in the form of tax exemptions. If you don't account for the exemptions foregone by these people, then the actual tax revenue that these states are collecting is much lower.
Okay.
So if you don't include the notional exemptions or revenues which they would have earned if the exemptions were not provided, because these exemptions will be taken away in the GST regime, then these are getting added to the value of revenue for the purpose of compensating these states. It's a good move.
Okay.
So taxes which are not collected today because of special schemes for these 11 disadvantaged states are being included notionally for the purpose of calculating the revenue, and more amount of revenue will be paid out for these states.
So if these taxes are not getting collected today, like you said,
Yeah.
and how will you arrive at those figures if they're not getting collected? Are there sort of figures already existing on states' books that we can sort of included in the revenue definition?
Very good question. So even though the states give up these taxes, there's a lot of reporting requirements for what has been manufactured, what has been sold. There'll also be requirement to file your returns giving certain details, and therefore from these details it is possible to arrive at what is the actual taxes foregone by the states, which should technically form part of their revenue, and therefore it will be possible to arrive at these numbers according to me.
Okay, understood. But we don't have a final word from the council yet on the rate structure, but the FM and the Revenue Secretary today gave some indicative statements on what the final rate structure may look like. So I'm going to read out those statements to you, and you tell me what you make of them. The FM said that there was 5 options suggested for the GST rate structure. The rate structure should be such that it should not lead to further CPI inflation. GST rate should be revenue neutral, and they don't want to raise the tax burden on consumers. And it should allow both the state and the center to discharge their duties. And the revenue model should make sure center as source of revenue for compensation. And then the Revenue Secretary, after the press briefing, told the reporters that the five rates that probably were sort of discussed, the services at 18%, standard rate proposed from 12 to 18%, lowest slab of 6%, and the highest rate of 6%. 26%, sorry. He also said that cess on tobacco, pan masala, luxury cars will be included or proposed to be included for compensating states, and clean environment cess will also be included for compensating. does that A, give you some sense of what the final rate structure would be like, and two, I mean, do the numbers add up and make sense to you?
So I don't know what the final tax structure is going to really look like. I do hope and pray that these slabs are kept to the minimum, because having multiple rates over a period of time becomes very complex, because it leads to disputes with respect to classification, whether I fall under this category, I fall under that category.
But will they not then, if they are going to give, say for instance, 5 slabs, will they not accompany that with, you know, those categorizations?
Sure, they will have classification saying that these goods are going to be falling under that. Okay. But the number of classifications for goods, for example, are only 3,000, while you have probably 3 lakh, 10 lakh, I don't know how many products are there. Okay. So you always will have in those gray areas situations where the goods are going to fall under this classification or that classification. So that's going to be one area where I think there's going to be a bit of an issue. I would ideally like to have very few number of slabs. So just have 2, maybe 3 at the most, and then have most of the goods fall under one of them. Minute you have 4 slabs, it kind of starts getting a little more complex and murky. Having said that, these are rates. If you see those numbers in absolute terms, are looking good for the industry. The industry was looking at 18%. They're looking at 18% as a standard rate. There was some suggestion that 18% will be rejected and they'll go all the way back to 22%, 23%. That was a big fear for the industry. So on an overall basis, sticking to 18% is a very good thing.
But we still don't know if that fear will come true.
Of course,
this is just a proposal.
So that's something that we cannot predict. We are not astrologers. We are at the most, we are lawyers and economists and journalists. So again, but having said that, the moves are good. It's not likely to be too far away from this, but we'll know tomorrow, day after, when we conclude on these 3 days, where we stand with respect to this. The second aspect which I'm more concerned is this inclusion of cesses.
Right.
In an ideal GST,
over and above the GST rate.
Yeah, so all these are going to be over and above GST rate. So the cesses are going to be obviously play an important role in the first 5 years, because if the actual compensation which the center needs to pay to the states is higher than what they had accounted for whatever reason, you know, we live in fairly vulnerable and unpredictable and volatile economic environment. So if they have to pay more, then cess becomes a way of compensating them, because cess by nature is collected by the center and retained by the center. So it need not be devolved to the states, and therefore cess becomes an important way of earning the extra revenue for them. To what extent they will utilize it and to what extent they will collect it will be something that we will have to see. But the fact that there is going to be cess itself means that there are going to be issues, because cesses traditionally have always had issues with respect to credit, have always issues with respect to collection, with respect to levy, with respect to the uncertainty with respect to rate, and so on and so forth. And therefore, that issue which was supposed to be solved by GST of subsuming all the cesses, and we did see this Swachh Bharat cess, Krishi Kalyan cess all being subsumed,
infrastructure cess and all of those,
seems to be back on the mantle. So we'll really have to see tomorrow and over the next few months as to what this cesses are going to turn out to be like.
Okay, so you mentioned that, you know, credit has been an issue with cesses. Would you expect some sort of a credit if these cesses come in?
We don't know. It's totally the discretion of the parliament and this thing. We've had cesses like the education cess, which is given as a credit, but Swachh Bharat cess is not given as credit. So there are a variety of issues with respect to these cesses. So you'll have to look at the letter of the law when these actually cesses come. But whatever form they are going to be an additional burden and an additional compliance issue for the companies and for industry.
Okay, I get your point, Badri, but you know, the FM also made this statement that they want a rate structure that should be such that both states and center can discharge their duties. Can you try and look at it from the government's or the council's point of view to help me understand that why they are sort of proposing, if at all, based on the Revenue Secretary's statement, these cesses?
So again, cesses is because you're fixed a rate of compensation at 14% year on year. You fixed a compensation which is going to include input tax credit, which you've collected. You've also included a notional revenue foregone by the individual states, and it's not that every state is going to grow at 14%, though it might look like a median or something like that. So if the median is say 12% or 13%, 14% is a higher rate. So all of these means that the states have
from
this.
the centers.
At the same time, they cannot increase taxes on essential commodities. So they cannot increase taxes on things which are services, which are this thing. So that leaves them with few options in the form of luxury goods, tobacco, and so on and so forth, where they'll have to collect that extra money. So cess to that extent is good because it tends to tax either the rich or those who are polluting or those who are a health problem. In a way it discourages them, also increases tax revenue and preserves the rate for the essential commodities so that the CPI index is not breached and allows the center to have the leeway to be able to compensate the states in case they go out of money in this next few years.
So basically this will help the center balance a lot of the outgo that the center will have to now sort of shoulder based on the state's revenue loss, etc., and the
Correct.
exemptions given to hilly states. So that this cess will help balance
and
that
at the same
outgo.
time the consumer is not unhappy. Nobody is unhappy if you increase taxes on tobacco or on luxury cars, right? So the consumer, the Aam Aadmi, is not affected by this. So it ensures that his payout from his pocket is lower. Those who are going to have bigger cars or who are going to pollute or who are going to have health advisory situations are the ones who are going to pay for that, which nobody really feels bad for. It's a conscious decision that they have taken. So once that happens, so you collect from the rich and ensure that you pay the states, and the poor or the Aam Aadmi person doesn't get affected by the entire structure.
That's the hope, Badri, isn't it?
Yes, absolutely.
So we'll come back to you once the rate structure gets announced by the GST Council. Anything else that you think would be part of the discussion of the GST Council over the next 2 days and should be sort of?
So the one big thing, which is one big elephant in the room, is that what they did not agree the last time they've had meetings, which is on the dual administration of service providers. There's been a lot of hue and cry on that. There have been some protests that the states also should be allowed to administer services and service providers. So that's going to be the other big thing which I think everybody is going to look at. So the rate for services, the dual administration, the tax structure in general, and I do hope that there is there. They have not discussed anything till now as to whether they're going to allow any band rate from the standard rate for the states, which is whether they're going to allow some states to be able to levy 1% higher or lower than what the standard rate is. That's something which has not been discussed. Doesn't seem to be on the anvil at this point of time, but anything can change over the next couple of days. But having said that, the main things are these: the dual administration, the rate for services, the tax structure in general, and then any other ancillary things that we're going to be discussing.
All right, Badri, thank you for decoding all of this for us.
We
await the announcements of the GST Council tomorrow and be back with the key takeaways. Thank you for watching Bloomberg Quint.